Good morning, traders. It's Wednesday, September 19th. Taking a look at the charts, we've got the SP 500. You can see here, more or less, the market has gone from on the 30-minute chart, a little bit of an oversold territory. It's had a nice rally up. We had a little bit of a cycle low, and we had a gap window fill here 2 days ago. More or less, the market stepped back up and continued to rally higher. Today, the markets are trading slightly lower, but relatively flat on the market. You can see over here, we're trading in this little topping formation, little red bar down today. Nothing too significant. We're still holding up above these key support trend lines, and we'll see if it can get a breakout and start to pop and have a squeeze here for the next week, week and a half going higher. Now, if we take a look over at bonds continue to flush down. We finally saw what looks like it's starting to get to an exhaustion point in the market. It's coming down, testing this significant pivot low where we saw a huge drop before. Took a couple days to finish flushing out, and then we had this knee-jerk reaction back to the upside. I think bonds are at the point here where they've already sold down this morning. They came right down to this this low over here. Usually the first time a standout significant low or high is touched, you will see an intraday bounce. That's what a lot of day traders will focus on. You look for these significant levels, and when it comes down, hits that intraday, you can get a nice bounce for a quick day trade off there. And that's what we've had so far. Came down, hit it, bounced. There will be lots of orders standing there to buy if that level is reached, which is why we get this bounce. Not to mention day traders look for it as well, and they can drive the prices higher as they all chase that kind of oversold bounce kind of play. Now, I would expect the bonds here to start to find some stability, potentially trade sideways or bounce up to the 5-day moving average. And we'll see if it can carve out some type of bottom in the market. If bonds do start a huge rally, that means we're probably going to start to see the equities market go soft. But we still expect stocks to trade higher for a little bit and for bonds to probably struggle down here for a little bit longer. Bonds may firm up before stocks. We might start to see money slowly rotate into bonds here before the stock market rolls over. We'll see how things unfold over the next week or so. Taking a look over at, let's take a quick look at the tech sector. Tech sector had a nice comeback yesterday. We saw more or less it was oversold at support, found a nice bounce on that level. And at this point, it's still struggling and trading sideways within this, you could argue here, a little bit of a pennant formation. It's got support trend line. It's kind of squeezing here into this apex. We'll see which way it breaks. Likely break to the upside, come up for a double top. Maybe then we see that bit deeper correction in the market. Who knows how deep it'll go at this point, but we'll see how the tech sector goes. And we saw Amazon posted an article about Amazon, very oversold the other day. Yesterday had a very strong knee-jerk reaction, bounce back up. We'll see if it can continue to get some stability. More or less, it's had a nice three-wave correction to the downside and a little bit oversold, hit a bunch of different technical levels. You can see here on the 30-minute chart, we've hit oversold territories a couple times here. Dipped down into these levels. We saw a nice bounce yesterday. Also got oversold over here. Saw a nice bounce. Now we'll see if we can get some stability over the next day or so. It might be a little bit weaker today, but then we could start to see it rally up and start to break out. We've got this falling trend line on the daily chart. More or less, price is channeling down, and if this is a continuation pattern, we've had a nice run up, and more or less, it's had a very nice measured move. Actually, it ran up, pulled back, and had a 100% measured move right to this high. So the fact that that played out perfectly, we've fallen down into key Fibonacci retracement levels. We should see this would be the halfway mark. The second halfway mark would be somewhere way up here going forward. So there is lots of potential, I think, for the tech sector to continue to rally. And if we look at Apple, Apple's gone from an oversold territory as well. More or less, doesn't quite you can see it right over here in the lower end of the chart. Got oversold, had a technical bounce. It's come back down. It's not quite oversold again yet, but we do have a cycle low coming in for some type of bounce. And we'll see if Apple here can pick up speed and continue to the upside. Again, it's had a series of very strong runs. The sector, big run to the upside. Large consolidation, another run to the upside. Maybe it'll consolidate a little longer here, but overall still holding up. And we'll see if it's going to extend and have that final kind of push higher in the market. Looking over at the transportation index, which we are long, Had a big dip there yesterday, sold down, and then had a big strong recovery back up to hold back up to the 5-day. So it's still holding tight. Buyers are stepping in when it dips down to this 20-day moving average. Again, same type of thing when something pulls back to a key moving average, especially when it's a special technical level where lots of bars have gone through, you can get that strong bounce off that level. And hopefully that's a reversal sign to the upside. A washout low, ran the stops, and hopefully we'll see this continue to march higher here. You can see on the 30-minute chart on the left, we have got the green bars. You can see how it dipped down yesterday into oversold and then rallied back up. We do have an upward bias with our short-term cycle here. Looking over at gold and the dollar more or less opened lower yesterday, ended up closing a little bit positive on the day, but it's kind of hanging on a limb, very close to breaking down. Our short-term bars here are all red, indicating we are technically in a short-term downtrend, so we could very much so see this start to break down and put a major bottom in precious metals. Looking at gold, nice pop today in gold. Looks like gold may have put in this bottom. It's building a launch pad. Hasn't really broken any significant pivot highs yet. We usually want to see two previous significant standout highs. At this point, we need to break this one and we need to break this one. That would trigger a very strong bullish bottoming formation and we could be off to the races. So we're starting to see a little bit of life in the market there. Looking at silver. Same thing, silver's up this morning, kind of carving out, very much so in a downtrend. Doesn't have nearly the bullish formation, but it is oversold, and eventually it's going to have a strong pop and rally from there. And let's take a look at the GDXJ. GDXJ held tight yesterday. Overall, it looks like it's carving in a nice bottoming formation. I do like to see these big waterfall sell-offs in the market where price just gaps and drops and we see huge volume. Overall, we've seen elevated volume for quite a while here. We're seeing big volatility. Usually when you see big volatility and big prices, it usually means we're coming into some type of bottom. It also happens during market tops. And this is hopefully we're going to start to see this expand and extend to the upside, and we could see a very big rally with silver miners or gold miners if we see the dollar start to roll over here. And this pattern here at the last couple of days, very high volume buying, very strong momentum, surge to the upside, a quick pullback, another strong pop, and now we're just kind of stuck between the 20-day and the 5-day, getting ready for potentially an explosive pop to the upside again. Taking a look over at natural gas. Natural gas had a huge move yesterday. Pretty much we were looking for it to carve out this bottom, and it went all the way from a bottoming formation in 2 days, being down testing a double bottom, all the way up to upper resistance. You can see here if we just draw a line across this level here, across these highs, if you go from closing prices, we pretty much came all the way up to the upper end of the range. Upper wick came up. We're testing it again today. The lower end of this range here, obviously, it's starting to kind of condense. Big pop there. Looks like a big short squeeze, and everyone just kind of getting their positions getting cleansed. Overall, now we're up at resistance. We'll see what this is going to do going forward. If it's going to carve out a little bit of a topping formation, it is stuck in this big range and could just continue to gyrate and chop around in there. But that was a pretty explosive move that happened. More or less 1 day, it went from a bottoming formation right up into resistance, and it can happen more and more. Happen easier as we get closer to the apex. As you're way back in these ranges, it takes several days to rally that much. Obviously now it's getting a bit narrower in price range from more or less these key resistance levels. And of course the next one will be even smaller. It'll probably be somewhere down in this range. So we end up with a much smaller range and easier for it to just kind of ping pong around. But the longer something coils sideways, the more power it has going forward. So again, we're still bullish natural gas long term, and I think there could be some huge moves up into the $4-5 range when we do break out on the monthly chart. Looking over at crude oil, down 0.2%. Crude oil trying to carve out this bottom as well. If you look at the price action here, you can argue we've got a resistance level right through here. You can see how prices come up, hit it, sold down, hit it again, hit it again. We're back up there. You can argue this is an inverse head and shoulders, which points to higher prices up to these recent highs over here. And it's just kind of holding tight at this point. And we'll see if it completes this basing, there's a little basing formation, or if this is something much bigger to the downside where we see the next big leg down, but I am more bullish on natural gas than I am bearish. This looks like um, a bottoming formation, and the fact that we keep pushing up into these resistance areas is telling us the sellers will eventually dissipate and be gone, and then we should see a quick pop and rally up to that 75 area. Taking a quick look at Bitcoin. Let's pull up Bitcoin real quick here. Bitcoin relatively flat on the day. Again, it's holding at this 6,000 mark. Nothing too significant really happening this week for Bitcoin. We do want to see a big drop and a flush down into the 4,000 range. That would be, I think, a huge opportunity for digital currencies around the world. A new opportunity to get in at prices pre-big explosive moves in all these currencies. But again, we're going to let this kind of dissipate. Us, obviously, we're kind of squeezing into this range. It's building pressure, just like we saw in natural gas. As something coils, it builds a lot of pressure. When it breaks in either direction in a significant way, it can have a very powerful move. And at this point, it looks like it wants to break down. Lots of big volume selling going on. We've had lots of high volume selling. I think we could see people get on the short wagon going forward here to the downside. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.